Let's try to get some examples. Okay, so if you're a complete beginner, you're basically just seeing a whole bunch of like, movements in the candles. Obviously, if you didn't know, charts move like this. They depending which time frame you're on. Say it's the daily, and the daily consists of candles. The candles each represent the candles each represent a moving in price in set time frame. So if you're in the daily time frame, you're gonna see a chart encompassing daily candles. So each candle of these represents a day of price action. So these are the most powerful because you can identify the general direction based on the previous day, um, which is the part of the fundamentals from the model, which you classify the candles in one of the three. There's the which is basically accumulation, manipulation, distribution. If you already know that. But back to what we said that um, each represents candles of the daily. So you don't have to think of this specifically as a daily chart. You could just apply this to any chart. So price moves in creating highs and lows. And depending on what highs and lows do, you can classify the current phase of price. So price has four phases. It has okay. It has the first one, which is the forgetting consolidation. The second one is a reversal, and the third one a retracement, and the fourth one expansion. So based off the movement of the candles that you see, you can classify what phase of price is actually occurring. So basically, what we have is a range throughout a certain. It's actually better if we do it with the current price. Move forward. So basically, we have a range, which is this. Let me just go over this. Um, okay, so basically, we have a range. This is applied from here as well. So we have a high and a low of the range, okay, and the price is moving within it. Um, when it comes to classifying what phase of price is happening, you have to um, you have to see how price interacts in that range. So right now, we see that we had a previous range, so now we're going to classify an expansion. So what we have here is we had a range from this high to this low, and price within this high and low, it broke out of it. So this right here is an expansion. This right here is an expansion. Now, this right here is an expansion. Now we expanded up, and then we're still within this range. Still within this range. Now we can classify this as a consolidation. Okay. Thingies anymore. We can classify this as a consolidation. What is a consolidation? Consolidation is when there's a given range, a low and a high, and the movement that's within it where price currently is. And what do you see here? Price is not making a higher high or a lower low. So it's stuck within the range. So it's a consolidation. Um, what happens in a consolidation? If you want to benefit from it, you'll anticipate a reversal to then catch the expansion. Or you can just catch the breakout, which is the expansion, and then the continuation after that. If we skip forward right now and we just see that we have the dealing range, which is this low to this high. We can still trade this given that we're in the daily time frame. We don't really need to anticipate breakout from this to that. That's only applied to the lower time frame. So the daily time frame, you basically see the points of interest, which are the PD arrays, which we can get to in a minute, which are for value gaps, which is a 3 candle pattern in the space between them. This is a point of interest. This right here. So what price does, it takes out liquidity, which is highs and lows, and rebalances and balances, which are for value gaps and efficiency. So what price did now, it just did a reversal, and how you do confirm a reversal is if there's a changes in delivery, CISD, which is you see there's a breakout. It's simplified, but if you want to get to this in detail, we could go here in the hourly, which is the middle time frame, and you see that we have the range. We have the range. You see that previous expansion that just happened, and classify the CISD. We classify the CISD. Right now, we did the initial CISD, but then we swapped it. We created a higher high and it goes below. The CISD is when price. This is kind of a shitty example, but it's kind of goofy. But this is still a CISD. It's when price goes to a point of interest, which is a high or a low, and then closes below the last series of the opposite candle. So down, this is a bearish example, which is the direction going lower. So if you're trying to anticipate the direction lower, you just need a movement up, take out of a high, and close lower. But this is better emphasized on the hourly. Right here, we have a reversal sequence, which we expand away, and then we take that away from that, close lower, based off the opposite series of tactical candles, which is this right here. This is this changes in delivery, aka an order block, and is one of the other fundamentals of the model. Now we haven't gone to the model yet. We're just discussing the basics, which are the phases of price. This is if you're a complete beginner. And now we're gonna get to the model. But before we do that, we need to explain the period of choice of mine, which is a fair value gap in the lower time frame, as well as changes to delivery. Thankfully, they're both in this, and the direction of and a confirmation of a reversal candle on the daily chart. So in the daily chart, you think of this as candles. So the actual range is this, but then you can deduce that from the candles that are happening right now. So this range is essentially a whole bigger range if you zoom in on the hourly. So if you're trying to anticipate this lower, if you're trying to anticipate this movement lower, actually, if you're given range, and you have to think of this as singular candle since it's daily. You have a range, which is this candle right here. And then just take back. You have a range, and then you need to see the next phase of price, which you want it to be a reversal. And we're gonna do a top down analysis right now. So you have your range, okay, with your singular candles. It's singular candles, highs and lows that are relevant, and points of interest, which are for value gaps, the gaps in price. Well, the gaps in price. This is not really one. I really marked that shit. Sure, gaps in price. It's kind of goofy. I mean, it's an opening gap as well as if your value gap stacked together. So that could be used as a draw. Oh, I forgot about draw. So once you have the reversal sequence confirmed, which is this, you see after you go to the point of interest and then you have your reversal candle, which is confirmed by closure below the high of the, which is a closure below the PD array. The freaking the point of interest, which is the high of the candle previous that. So we have a reversal sequence after reaching a point of interest. So what can you say? We have a true value gap right here that we can target based off of this. And what else? We have all this low resistance liquidity, which is basically failure to reverse. So those are also stacked together. You can mark that, and mark all these essentially. So these are draws of liquidity. So price is likely to draw here next, given this reversal candle. So we're not gonna pattern trade this. We're not just gonna take a short entry. We're not just gonna take a short entry and just do it here, which may work, did work, but you need to refine this down. And how do you refine this down? You go to the lower time frames. You need to dissect this essentially. So you have the closure below the point of interest, and you have to confirm that to see if this is a valid reversal. So going back to what we said about change of states of deliveries and fair value gaps, what you need to see in the middle time frame, which is the time frame you go after you confirm the reversal on the daily, what you need to see is those things playing out. So you see this more zoomed in, you see the movement, you see the reversal forming, and you need to confirm it in the hourly. So basically, sometimes reversals occur where there's a big candle and there's a small reversal, but that's not confirmed because it's not a CISD. That's not the case right here because we have the CISD. We have the closure below this, which is the last series of down close candles following this leg up. We have a reversal sequence, which people may know as a sweep. And where price is right now, that's what you have to think. Well, the daily candle, and you see the low resistance liquidity as well. These are all the targets. We are all trying to target all of this. So we have a change of state of delivery, and we have a fair value gap right here, which is the next step. You're looking for value gap, and You want to see it open, and in this case, which is bearish, you want price to go up and then down, interacting with this fair value gap, which is going to be the anchor for you to go lower on the lower time frame. So you're basically using this as a confirmation, and this is the sort of the boost of the sort of the continuation sequence. You're participating in the continuation sequence, which is the expansion following the reversal. So this is the anchor. You want a candle. You want a candle to be closure, and I forgot to classify them in the daily. So you can apply this to any time frame. By the way, so the candle one. So candles are classified as 1, 2, and 3, and 4, maybe 5. You have candle 1, which is the distribution phase, which is the candle you want swept. You never count these, rarely. You have candle 1. Let's just swoop back in. You have you have you have candle 1 right here, which is the range. Then following candle swipes that, and then creates a candle 2, which is going to be your best friend. It's just your confirmation. You see this on a daily as well. That's what we were looking for. We were looking for a sweep in the range, following the breakout, a reversal. So this represents a reversal. I'm just showing this to classify the candle 1, 2, and 3. So basically, you're looking for candle 2 on the daily, and then you confirm the candle 2 by changing state of delivery right here. This is irrelevant. I'm going to get back to this in a second. I'm going to get back to this right now. So you have the sweep. This is a candle 2. This is a candle 2. And then, given a candle 2, you mark the equilibrium of it. And then you use this as a metric. If price goes, this is a bearish sequence. So if price goes to the opposite way, disrespecting equilibrium, the movement lower is invalid. Even if it does it, you're not chasing it because, well, as long as the body is respecting, of course. But what you see here, let's let this candle close. Okay. This would have been a better example, actually. So we have a candle 1 right here on the daily. This represents the daily time frame. We have the candle 1, and then we have the candle 2, which sweeps it. And then the candle that we're going to want to operate in is the candle 3 of the daily, and another candle 3 on the hourly after we interact with a point of interest in the following candle after the candle 2. And after that candle 2 is confirmed with the CISD. And if it has a point of interest existing prior to it. So prior to it closing. So the candle following that is candle 3. The candle following that is a candle 3. And then yeah, it's just 1, the range, 2, the reversal, 3, the continuation after it. The continuation always respects that. The continuation always respects the trend as long as it respects equilibrium, which is the more ideal sequence that you want to follow. You don't really want to trade a candle that's disrespecting equilibrium, but you want it to form its wick. I mean, you see that we inverse this rally gap, so this setup is null. So back to here, we're trading the candle 3 still because the wick is respecting it. Okay, so this is gonna get a bit more advanced. So we inverse this fair value gap. What other points of interest can we use while still respecting equilibrium of the range? We see these highs. We see these highs. And essentially what you want to do is trade away from the reversal candle, from the candle to candle. With the you have to want to trade away from a high that's protected. What makes a high protected? It has a CISD, so that's what encompasses the model. You want to protect the swing in the hourly to then interact with the point of interest on the hourly chart. You just want the reversal on the daily, which is here. Didn't really close. I mean, didn't fucking close on the chart itself. It's here. You want to interact with point of interest and have a candle 2 closure in it. Actually, this was fucking tradable. Pardon my language, but I missed it. We have a candle 2 closure, so what you want is a sweep, but a proper sweep. I mean, this wouldn't really be viable because look at this. This is a tiny sweep. But as long as it has a CISD, we should be golden. So we have their CISD here. We have a point of interest, and we have another CISD. What does it say? We're gonna trade lower at least at 2R. This is kind of low probability, but shit, this could still play out. We already saw that. There you go, 2R. That was the play of the following candle. Didn't really interact with other lows, but still, what we did is, sorry for my partisan, but what we did is, we did what we did with the daily and hourly. We saw candle 2 closure and a point of interest, which was a high in this case. We went to the middle time frame. We confirmed the reversal of this. We confirmed this with a CISD. We saw that there was a point of interest. We waited for price to go to that point of interest. It opened. The candle opened. Went to the point of interest, a free value gap in this case. And we waited for a sweep. A candle 2 closure within it. We have a candle 2 closure. We have a sweep. We go to the lower time frame, which is the time frame following that. So you go to the 5 minutes. It's the same case. You confirm the candle 2 that just happened. If it had a CISD and if the high is protected, which is bearish. In this case, we're framing a bearish sequence, so we want to go from you want to go higher or lower. If you're bullish, you want to go lower or higher because the reversal is going to be happening at a low, and on a bearish instance, the reversal is going to be happening at a high. So we confirmed this. We see that we have an equal low right here with this. These are all the targets. And then you see that price went to the point of interest, went here. What is it saying? We have the continuation sequence right here. Sure. That's it. Sorry for okay, we already seen this, but sorry for kind of scattering around in that explanation. I kind of skipped the introduction of the 5 minute, but essentially if you're caught up with the lingo, you're catching a candle 2, a reversal, candle 2, and then catching a candle 2, and then you confirm a candle 2, and you do that 3 times. And you see the candle 2, the reversal, go to the hourly, you confirm it with a CISD. CISD is a closure below the last opposite candles. So you have the CISD, confirm this candle, so this high is valid. This high is valid to trade away from. So this high is valid to trade away from. Okay, this one. you confirm the high because these are safe to go away from because you have the CIC. Then with the opening of the next candle, which is this candle which just opened, you see what are the points of interest that the last candle gave me. We're on the hourly right now. So what did it leave us? It left us an imbalance, which we explained at the beginning, which are three candle patterns and efficiency. What price does, finds highs, balances inefficiencies, trades to the inefficiencies, trades to the highs. By doing what? Following the phases. An expansion occurs after reversal. The reversal happens after consolidation. But not always. Primary retracement. Everything's a retracement, basically, as long as you're. I mean, what would classify as a retracement? Given this bullish trend, we'll classify as a retracement if it went here and went to this fair value gap. This swept that. You can see this as a retracement to then catch this or might as well give you a playbook. So the way you go about the markets is you see the phases and you apply the right phase or you anticipate the right phase in order to capitalize on the phase you want to participate in. So you're always catching expansions. So to catch an expansion, given the current phase, you have to think about it like this. You have to think what needs to happen in order for an expansion to occur. So if it's a consolidation, which is we're stuck within a range, you want a reversal in a point of interest, which is the highs and lows of that range, or a point of interest, which is the fair value gap as well. So if you're consolidated, which is when we don't break out of our high or low, which is this could be an example. We're consolidated, we're within a range. We're consolidated, we're not doing any highs or lows, we're just stuck within this range. You need to apply the right phase. You have to think, oh, what needs to happen in order for me to trade away from these lows? Which is a bullish instance. Like I said earlier, if you're bullish, you want to trade away from a low. You want a reversal from a low, trade higher. If you're bearish, you want to reverse off of a high. Trade low. So in this instance, we're consolidated. I'm explaining how to get out of consolidation, like a playbook, like I said. So we have consolidation, not making high, or low. If you want, what do you think when you're in a consolidation? You say, let's interact with one of the highs. If I want to frame this bearish, I'll wait for the high to be taken and then a candle two closure. That didn't happen in this case. This was bullish because we went here and we made a candle two closure and a consolidation. So in order to get out of consolidation, you want either one of the highs to get taken. Okay? And you want to do it on side with the bias if you're gonna do it on the low in the middle time frame, in the 5 minute. Okay, great. I can't go to the 5 minute, but you have to apply this to the direction. You can just say, oh, there's a reversal on off of a high, and then you zoom in, and then you see that there is another consolidation, a micro consolidation, and then you're framing this like that, and then you see this. You can't just trade away from low on the middle time. You can't just do that. That's against your bias. You're fading. You're fading. If you want to get out of consolidation on the middle time frame, on the structure one, it has to be on side. So say we're delivering off of this side. Say price actually went here, reversed, and then did a consolidation. Like I said, you're not gonna frame an entry off of a low to trade higher. You want to frame an entry on side with your trend, on side of the reversal candle. So, like I said, on a bear sequence was if price did the reversal here instead of here, and did a consolidation playbook. I'm explaining the playbook. You see the consolidation, which is a point of interest, basically. You want the high to be taken on a bearish instance for you to trade lower. Not the opposite way. You're not going to fade the trend. You're not going to fade the model. You're trading a continuation of a continuation within a continuation. So back to the example, which is what's actually happening. We have our consolidation. Hopefully now you know what a consolidation means. There's a range. Price isn't taking anything. It's within the range. Where do you wait? You wait for either the high or low to be taken in order for you to frame this. It's taken. What happens when it's taken? You have to see what phase is happening. You see the candle 2 happens, so this is a reversal sequence. Oh, what goes in your mind when it's in a reversal and a point of interest? You have to see to the left. You have to see you see what the fuck's happening. You see there's failure swings. There's failure swings. There's failure swings. Targets. Another target. Fair value gap. And you want to trade to them. These are your draws on liquidity. You want to capitalize to them. These are your targets. What do? You confirm this candle 2 closure on the middle time frame, like I said earlier. This is actually kind of skeptical because I'll explain this again. Actually, not really. It's the same thing that happened earlier. Okay, whatever. We sweep here, not here. We sweep here, and we confirm the candle 2 closure with a CIC. You ever CIC? You have our points of interest that are left off, which is our anchors, which we want to trade in. And we wait for the new candle to open. We see all the failure swings. We see the fair value gap of the daily. Targets. I mean, you're not going to expect it to go here. You're going to expect it to at least go to the fair value gap front here, but that's let's see. Safe for trade, safe for our anchors here. But still, these moves are possible. Trade here, 7R. Shit. You're targeting 2R in the 5 minute, bro. That's like, bro, that's a fraction of that. Okay, we have our reversal candle confirmed. CSD. Sweet. Points of interest. Anchors that we're gonna use. And we wait for the new candle to open because we're participating in a candle 3 and 2 separate time frames. So we're participating in the candle 3 of the daily and the candle 3 of the hourly. So we wait for us to interact with the point of interest and make a candle 2 reversal candle there. On side with our trend. Again, we're in a consolidation. Broke out of consolidation. No points of interest, just leaving these dormant. Go there. See, okay, I didn't get to this, but these are correlated assets. The S&P and the ES, they have similar charts. So if you see a low or high left off, you go to the other one, see if the other one took it. Didn't do jack shit. So we stay on this one. Why not? You see, we have another consolidation. That's the point of interest. React very negatively. And we're not delivering, and the candle closed. So what do? Change your bias, maybe, because why? We have, let's let this candle close. Okay. Change your bias, yeah, but we could fucking frame this shit. No. Well, on a night, I'll show you guys the ideal sequence because we did but fuck nothing. Just went higher, went to the point of interest, and did a little lower. That's why I say we want to open low, high, close in a bullish example. So you want this next candle is about to open to go lower first into the point of interest, have the candle two closure then, and then deliver higher. Not this. Not for it to go up, do a bunch of razzle dazzle. You see, just manipulating highs, creating a candle two closure here, being all controversial and shit, being all goofy. Like, who's framing this, bro? Like, and there's no time left on the candle, so we go to the point of interest finally. But what do? We just inverse it. We didn't fucking do it. Because, bro, mean as hell. And there, candle closes. So that's not tradable. So what do? Change your bias. Wait for the next candle to close. Let's see what happens now. Delivery lower. We have a candle 3. After candle 2, I mean, candle 2 doesn't always have to be a reversal for it to be candle 3. If there's a candle 2 with a big wick, doesn't necessarily have to be a bigger one, a massive one, but of course it has to be a big one. No, this one didn't. This one did close. Well, it's not a bearish candle, so it's not a black candle. It's not a bearish one. So if this one closes below this, it's a trend lower. So this high is a candle 2, and this is a candle 3. A conditional candle 2. It's called. I mean, that's what I call it. It's not an official one. But yeah, candle 2, 3, 4. What do 4 do? See again. You want to open high, low close. We're kind of talking about all the concepts, but not really in detail. We're just gathering about that, bro. But still, you're learning the model. You want an open high, low close, but this didn't do it. This one again went lower, opened, went lower immediately. Didn't go to the points of interest. Didn't care. What does it do? Oh, did go. Beautiful. It went to a point of interest. It created a point of interest, actually. And did the candle two closure there. I mean, I would go to the 5-minute, but it's not letting me. But essentially, you zoom in on the 5-minute, it would look like this. You see this movement, or zoomed in. And what you want to see is you want to see this change of state of delivery of this, and then a point of interest to be tapped in. So the open of the following candle of the next one, you want it to trade higher into an inefficiency to then create a high, a reversal, and then another CISD, propeller propulsion block, order block, CISD, order block, same thing, propulsion block, the order block following another order block. So you're trading the propulsion block off the order block of this, confirm it on the 5-minute, and then you trade away from it, given that this anchor right here is a protected low. So this, I'll just let's do it here like this, and then target 2R, and then it should be like this. So it hits it immediately. Beautiful. Bro. Bro. What? So 2R. however. Beautiful. Um, so yeah, I'll get a better example by showing the actual 5 minute. Another example. So let's just do a top-down analysis. Get this over with to see if you guys are in check or if I explained it well. So hopefully you guys are all caught up. You see your given range. You think of in candles in the daily. You think of this as singular candles, and as points of interest and fuck, bro, like these huge ranges, but these are like zoomed out, so you would classify them like this. Like this is the range, this is the range. You can frame this off of either of those. It doesn't matter the value here. So you're gonna frame a bearish example here. You have a value gap right here. After value gap right here, and basically step one of the model. You want a reversal sequence, the candle two closure. We didn't touch it yet. I mean, but we have to see if we have an SMT. That's also what we explained earlier. Correlated assets. If one high or low doesn't take it, the other one could take it, and we could frame it off of that. Okay, we have SMT. Beautiful. So, I mean, I'm not an expert. You don't. I kind of low key heard that you don't frame trades off an SMT. We're gonna try. Okay. We have SMT here. Go to the middle time frame. You want to trade the asset that's lacking, by the way, or the one that looks better. So let's compare. I mean, no point of interest, but you can use these highs best in there. But if you're trading a high that's this close, we can still do it. Okay. We have this. Let's compare it with this. Yes, the same deal. I mean, I like the separation. We'll go with yes. You confirm this with CISD. CISD. We also look here, so that's another confidence we can use. What do? We see the consolidation that's happening. So see the consolidation, and you want to frame this to your side. So basically, you want this high taken, the candle two traded away, point of interest. Okay, so let's frame this. This is on side. You have to wait for the next candle to open high. Sweep this and trade it lower. What does it do? Let's see. Trades lower. Okay, creates another range. Goes right here. Okay. Okay. What the fuck? Okay. Ever not really candle two. This is actually yeah, you can frame this, bro. Let's swap this. This is candle two on the 4 hour at least. Same thing. Whatever. We have a sweep here. Go to the 5 minute. Confirm the sweep. We're in New York. Beautiful. Do we have the sweep? Just barely. Do we? Not really. No points of interest. Let's see what happens. Okay, we trade to these lows. Let's see if we create any point of interest. Okay, just overall looking like a consolidation. This isn't a CSD, didn't touch a point of interest. Another point of interest happened, but how much time we have left in a candle? Okay. Sucks that it doesn't show. But we have a point of interest, we can still frame this lower. candle two. When we need after candle two, closure below the opposite candles. We get the closure, and with the tick entry. Kind of a risky one. I mean, the candle is exhausted. We traded, expanded this much. We try. See what happens. Okay, we take it. So yeah, that's basically it. You're just confirming candle twos. You're just confirming. You're just confirming reversal candles on the lower time frames. You're dissecting them and then catching opportunities on the lower time frame. Yeah, that's what you're doing. It's simple, bro. You can go on YouTube. I'm not really gonna make a series of this. I think I'm gonna be more live stream. It's just I don't know, BS. think I'm gonna be I'm gonna be live streaming more rather than doing more tutorials. I think this is just an intro to the channel, really. But like we said, think of the market as in phases. You have to frame the phase with you want to frame the phases with the one that you want to happen in order to catch an expansion. So everything's in consolidation, basically, but you want to catch reversals all the time. Catch expansions following that. Um, fuck was explanation, bro? I mean, you have your range, consolidation, phase one. You want to see a reversal, phase two. Then you want to see a retracement on the lower time frame. But then catch an expansion of the higher time frame. So you apply that to every single time frame, basically. So you have to know that those rules. So if a consolidation happens no matter the time frame, you know that you're seeking the reversal towards your drawn liquidity. It's the opposite way, no good. And yeah, I mean, it's more simple if you do it yourself, bro. Just freaking. I wouldn't really rely on this video. I mean, I kind of scattered all the of the of the of the how do you call it? All the concepts. That was the word I was looking for the entire video. Concepts. You're kind of scattering all the. I scattered all the concepts across the video. Shit, it's whatever. You can still watch this. It's a simple model. You're just catching continuation after continuation after continuation, which is expansion after reversal. So you want to see a candle two in every single one of the time frames, and you want to participate in the candle three. So the live candle that you want to operate in, candle three, you want to see if it's not exhausted or not. So you want to see a clean trade into your point of interest in order for it to trade away. In a bearish example, open high, close, and did I say bearish? I did say bearish. And in a bullish example, we want it to trade lower into your point of interest in order for it to go higher. As simple as that. In the middle time frame, because at the end of the day, the daily time frame simplifies everything. All you need to do in the middle time frame is confirm it, wait for it to reach your point of interest, and then make a candle to closure there, a reversal, and then wait for the new candle to open. And that's when you go to the entry time frame because you already did all the work on the higher time frames. You already caught the trend, so everything's aligned for continuation to happen. But you need the confirmation on the entry time frame in order for you to capitalize on it. So it's the same deal in the entry time frame. You go to the 5 minute in this case, daily, hourly, 5 minute. You go to the 5 minute, you see the points of interest up there, same deal with the daily and the hourly. And you want to trade cleanly into there and then have a closure above with the CISD. I forgot to say that you confirm the reversal candles with the CISD every time. If it doesn't have a CISD, it's not valid. Yeah, that's basically it. That's the model, bro. The T-Trace fractal model. Hope you beautiful, beautiful model. We're gonna be streaming on Tuesday or Wednesday, I think. So gotta tune in. 6:30 a.m. Pacific time. Gonna be trading New York Open. Hopefully, we make some good trades. It would be lovely to chat with y'all. This is not financial advice, and yeah, bro, cybernetic, man. Shit. Uh, if you have some suggestions on what you want the channel to include, hit me up. Just comment below, like the video, subscribe, hit that follow button. No, hit that bell. And yeah, bro, I think gaming's gonna be a big deal here too. TikToks, TikToks eventually. And yeah, bro, that's the video. Okay. Shout out to Trades. Shout out me, bro.